Welcome to Season 2, Session 4 of Wattle Partners Market Thinker Series. This season, we'll be talking about themes, or concentrating on themes. We'll be focusing on the most technological, demographic, and societal trends that are occurring in the world. We'll be speaking to an expert or experts like today, and identifying what are the most powerful trends. Drew and I obviously sit on the Wattle Partners Investment Committee, and every month that we meet, we talk about these trends. And why we talk about trends is they're incredibly powerful in wealth creation and portfolio construction. So this week, we'll be talking about what is now a hot sector, renewable energy. Joining us is Toby Bucks and Simon Woods of Ausbil Investments. They run the Global Small Companies Fund. So today, we start at the top. Drew, do you want to just run us through the opportunity or the theme of renewable? And if Simon and Toby, you want to join in post Drew's introduction?
Yeah, definitely. I think it's obviously incredibly broad subject, renewable energy. It's pretty topical at the moment. I think we had the Yallourn power station, coal-fired station in Victoria being shut down about 4 years early this week. And just for some background stats, which I think are quickly out of date as well, at last report, there's something like 42% of the net emissions or net carbon emissions across the entire world come from power generation. I think maybe that was right in 2018, probably slightly different now. We've also seen something we'll probably discuss later as the Biden administration come in with a very clear focus on moving towards net zero and the potential political implications of that. And just looking at stats this morning, we're kind of looking for S-curves in the themes that we talk about. So there's stats that say that the growth in renewable energy installation, mainly small scale, so on roofs, is something like a CAGR or a compound annual growth rate of 50% over the last decade. Would you kind of share those views and stats, or am I a bit out of date there, Simon and Toby?
Yeah, so firstly, thanks for having us, guys. We love what you guys are doing, and it's great to be able to talk to your clients and your clients that invest with us. So thank you very much for this opportunity. We think renewables is a great opportunity. There is going to be a huge change, especially up to 2050, in terms of the investment and the investment opportunities that are going to be available in this space. Just on a high level, we've seen renewed impetus with the Biden administration coming in. I think immediately after Biden's inauguration, he took the US back into the Paris Agreement. So with that target of aiming for carbon neutrality in 2050, which is a huge commitment. I was doing some research earlier, and the US consumes about 4 billion kilowatt hours a year, which is obviously a huge amount of energy, but 60% of that is still powered by fossil fuels, about 20% by renewables, and 20% from nuclear. So there is a huge shift that's got to happen over time to get to these carbon neutrality targets, and we actually think it's probably going to happen quicker than a lot of people think it is, because there's a lot of momentum building in this space.
And is that kind of the key driver of where your view of renewable comes from? Is it the top down, or is it, we were talking about how you do both top down and bottom up, as in looking at the theme, looking for growing markets and looking for good companies. Is most of the renewables coming from the top down?
Well, top down's really important to us. We've got a great team at Ausbil, and we've got a lot of expertise there, and we don't just look at sort of themes per se, but we look at the macroeconomic environment, what the Fed is doing, alongside interesting themes. But one of the interesting or the great thing about identifying a good theme is you can see there's lots of potential growth there, but that's sort of a two-edged sword as well. You really have to find the companies that are going to win, the quality companies, the quality management teams that are going to be able to leverage that growth, because there are going to be a lot of winners in this space, but there are also going to be a lot of losers as well. And you've really got to understand the company, understand the quality of the management team, how they've delivered in the past, and what they're going to do going forward to grow their earnings and deliver great risk-adjusted returns backed by that strong tailwind of the renewables theme. So it's really a bit of both. It's a lot of bottom-up work, but also being really cognizant of the top-down tailwinds that are going to help you when you're building a portfolio.
It's like an emergence of a whole new sector, though, isn't it? You know, if you think about, break renewables up into lots of sections, and we've got here, batteries and commodities and panels and converters and manufacturing and the construction of solar farms or wind turbines. There's some technology that goes into it. There's probably it's like a whole sector's being built. So essentially you could build it you could build exposure to it so many ways, couldn't you? You could own the land, or you could own the manufacturer, you could own the tech, or you could own the power companies that are now pushing out green energy, or there's so many ways to build this, to kind of get exposure to not just renewable energy, but the whole sector that's growing.
There is absolutely. And what Toby and I try and do is have sort of a really good understanding of the whole ecosystem, because I think there's definitely areas of the ecosystem where you probably want to avoid that have been commoditized. For instance, the manufacture of just the solar panels is largely commoditized in China now. You're not going to get companies that are making a huge margin or doing anything particularly sophisticated. It is a very bulk commoditized business. But for example, some of the hardware and software that supports solar panel installations and the rollout of solar panels is much more interesting, and we think there are some great opportunities there as well. So it's really sort of trying to understand the whole ecosystem, and then saying which companies are in best placed to make money and grow their earnings from this. I mean, one thing that's really interesting that's become a sort of, again, a hot topic within the hot topic of renewables recently is hydrogen, and how we're going to use hydrogen to fulfill our green needs going forward. And Toby's actually been doing a lot of reading on this recently, but there's different types of hydrogen generation. The best being green hydrogen, where you use something like solar power to generate the hydrogen, because that's very clean, versus grey hydrogen, where you get the hydrogen from natural gas, but you actually don't manufacture that hydrogen in a clean manner. So there's actually no benefit. So it's really, for us, about understanding that whole ecosystem, and then finding great companies that can own a niche within that ecosystem.
There's something like investing into Fortescue, that's the biggest iron ore miner, but trying to get into green hydrogen at the same time. I know it's probably too big for the fund. Would that be something you'd?
Yeah, so I think
it needs to be a bit more material.
That is big.
We're into niche leaders, as you guys know, and like Simon said, and you pointed out, Jamie, one of the great things in the small cap universe is there are sort of emerging nascent technologies out there, and they're niche plays. So whilst you might get a mega cap go into developing that technology, and often those players are the ones who are successful at getting world domination from commercializing it. At the same time, the asset class offers so many opportunities to come at this from many different angles. And the most important thing is, for us, is there a quality management and a niche leader? Because we've seen cycles in all these things, whether it was renewables or the commodities boom or the EM boom or the dot-com boom before that, you get a lot of capital that gets wasted. Then you've got to make sure that you're with the guys who are allocating the capital in the best way possible. And we're not looking for that theme specifically. Like you said, Jamie, it's everywhere. So we're looking for the niche leaders and the quality management. When we come to assess the unrecognized growth out there, clearly we're looking at their opportunity set and how they can execute on that. And those I think are the key areas to make sure you don't get involved in someone who sort of is a value destroyer and sort of wastes capital chasing a moonshoot, rather than making sure there's a return for capital, there's a return for shareholders.
This came about, I love this guy that wrote the book of Third Industrial Revolution, Rivkin, and he talks about what is upon us in terms of energy and renewables. But at the end of it, he talks about what energy prices could be plus 30 years out. And the outcome is that they'll be substantially lower, maybe like 10-folds lower. So
negative, I think at one point, wasn't it?
Yeah, nearly free, right? So it's fascinating. I think it's a fascinating presenter and fascinating theme. But when you're talking about the evolution of or the continual downward pressure on energy prices, then that's a theme that's hard to make money out of in a traditional way. E.g., I'm going to buy a portion of a really big solar farm and I'm going to be okay over a 30-year period. Well, if prices are going to fall 90% over that period, it's nearly impossible to make money.
Yeah, and again, you want to be at the cutting edge there, Jamie. You want to be at the guys who are stepping up the technology curve. So that's I agree with you, that's one of the most fascinating things about new technology, is that onward pressure on technology, manufacturing, production, getting the cost curve down. I mean, hydrogen, we just mentioned it. I think people are really interested in that because it's popped off in the last year, right? Really,
sure.
Led by sort of the EU, but we can get into that. There's a French company that's pretty much developmental, but has delivered sort of 10% of the existing hydrogen filling stations in Europe, and is backed by the French government, and is backed by two major players in the production of equipment. So they get metal pipes and flow controls, and they make stuff happen. But I think the interesting thing is they say already they reckon there are €5 to €6 a kilo of hydrogen, which is cost parity with diesel. And that's with a filling station with an electrolyzer that's being fed by solar power, which is green hydrogen, and they've got an own compressor on site to pump that hydrogen into a tank. And that's cost parity at the moment. They've just already 180 million euros, particularly from industry partners who also help make the equipment and do the distribution. And they reckon over the next 5 years they can get that cost down to €1 to €2 a kilo. So that's 4 to 5 years ago to see heavy trucking in Europe at sort of 60-70% cheaper than current cost of diesel. So that's quite exciting, and it shows you that we're at the tipping point of people saying, hell, this is exciting, let's chuck all of our money at it, huge amounts of money, knowing that there's no return in the next year or two, but just on the assumption now that we're at the tipping edge where that production capability, the manufacturing goes from small scale to actual fully automated assembly lines, commercialization and know-how. And you don't know whether it's going to be like the outbreak of the Model T and what that did for manufacturing and the cost of ownership. But they're telling you, the companies now are telling you that's what they think is going to happen.
It's incredibly exciting because you don't just have hydrogen, you've got electric, you've got a number of these different things that are all happening at the same time. And Drew spoke about Forrest, and everyone didn't think he could execute what he did. And a bit like Elon Musk, right? You need these big thinkers and big dreamers to push these ideas forward that create whole new sectors and change the way that we're doing things. So
they talk about it being the biggest investment, decades of investment almost in history, isn't it? Because you're talking about redesigning buildings. If you listen to the presentation that Jamie was talking about, how not everyone thinks about renewables and goes directly at solar and at wind, but it's redesign. Most of the EU and I think American stimulus is all about fixing up old-fashioned practices and reusing energy and redistributing energy and water and harnessing it all.
Absolutely, and I think it's going to become a lot more decentralized going forward. So you think about the structure of energy production at the moment, it's generally big utilities, big power plants pumping out huge amounts of power and being dispersed through the grid. What I think is going to happen going forward is you'll just get huge levels of decentralization where it will be smaller generating bases, whether it's solar farms, whether it's wind, whether it's hydro, and then you'll use smart grids, so smart technology to manage that entire ecosystem. I read recently that they think there's something like 10 trillion of spending that's got to happen to hit some of these 2050 goals. And like you say, Drew, it's not just going to be about power generation. It's going to be how do we build better buildings, better insulation. It's the entire ecosystem that's changing. But we've got a couple of companies who are starting work on sort of smart grid technology, because we think that's going to be a really interesting area, and companies are going to really be able to provide a great service there, and deliver some really good associated earnings with the services and products they produce in that space.
And is it really, I know government supports there, but it's really the private sector that's pushing it at the moment, isn't it? In renewables and battery.
Yeah, it's to an extent, Drew. I think the political mandate, the will of the individual and a political mandate to go about green reform is always the main driver. But what we've seen now is that the world's governments have got to spend heaps, both fiscal and monetary, to get us out of this mess. Now, still, although the road looks rosy going ahead, it will be rosy because of all the stimulus. We still need that stimulus. And the governments know that. And they've also realised that they've got to, to the best of their ability, secure a cleaner and more hospitable world in the future. And so it doesn't take a genius to put those two things together and be like, okay, well, all the stimulus is going on green stuff, because we've solved our two biggest problems every government's facing in the Western world at the moment, which is that they need to clean up their environmental act and they need to spend loads to stimulate the economy. So it's an easy win. And we don't see, and for that reason, we don't see that changing in the near term. If anything, that government support is now backed by central banks as well, in a way, if you think about it. So it's just going to continue for a long time. And as you say, Simon and I sat down, we went through our portfolio, but you guys said, can you guys want to come on and talk about renewables and what you think and what you hold? So we went through our portfolio and
I think we said digital advertising first.
Yeah. Well, that's an exciting area we can do again, because that world's changing from where it was a year ago. And I think there's a lot of excitement there, but that's a whole nother one. But
it's a different one.
Yeah, when we went through the portfolio, obviously some stocks really stood out. There's obviously, we know they're very renewable driven, but there's a hell of a lot of stocks there that are still benefiting, that, are great companies anyway. Whether they're involved, they've been involved in improving buildings design and environmental features for a long time, and it's now they're all getting a boost. So it's like a lot of things with COVID, whether it was working from home, and that might sort of reverse. But the green investments was a trend that was ongoing, and then COVID's just given it a massive acceleration.
We saw the EU for the first time in really the EU's history. France and Germany got together and they implemented a huge fiscal plan of 750 billion euros in May last year, and that had a very, very heavy green focus. So I think COVID has actually allowed governments to step up and announce fiscal spending plans, very much focused on green infrastructure. And obviously Biden's talking about that. He hasn't done a press conference specifically on that, but he has signed, like I mentioned, several executive orders since he's been inaugurated, really focused on improving or focusing on climate change and turning back some of the legislation that the Trump administration put in place.
And so the EU is doing it by basically, if you want money, you have to invest it in infrastructure, in rebuilding, in new technology, in battery. Is that how they're kind of forcing?
That's essentially what they're doing. Yeah, they are. This 750 billion euro is basically being provided to the country governments with a strong focus to improve their carbon emissions. So there's actually more, there's a larger proportion of cash going to some of those countries that are the biggest polluters to help them very quickly sort of get that carbon impact down.
And I know you don't look at Aussie, but it seems like you need to be global when it comes to the renewable supply chain, or the whole theme. There don't seem to be too many companies investment grade in Australia.
No, there's nothing we found specifically in here. Although we can see there's the demand from the citizens of Australia for solar panels, as you mentioned earlier, is growing at a phenomenal rate. So it's very much being led by sort of individuals and households in Australia, but the sort of the bigger names who are providing this, the bigger companies who are providing this sort of this infrastructure and this tech, most of those are offshore.
Yeah. Should we pivot to those, Jamie?
For sure. You said you went through your portfolio. Is there anything in your portfolio that you picked up and thought, well, that's because of this theme?
I'd like to think we were aware of them all before, but there was a lot, and running through a lot of different sectors. I mean, like anything, you can make anything as relatable or as tangent as you want. I mean, we've got some clear winners.
Do that, please.
And I think they're probably the best ones to focus on. Although if there's time, there's lots more to talk about, because the green movement isn't just about making your building and your car and your energy consumption better. There's a lot more to it in terms of lifestyle change and etc. that we would say would be slightly related. But today, let's focus purely on keeping CO2 emissions down.
You like the circular economy, waste management, recycling, water.
Yeah, how people want to live their lives in the future, how governments actually see cities, what that actually means, all of that.
So we can drop the energy off the renewable topic, and then it becomes very wide, doesn't it? From nearly everything we do is changing.
Correct. The whole ecosystem. But three of the names that we've got in the portfolio that we've actually held for quite a long time, quite a while before Biden got voted in. One is SolarEdge, which is a leader in solar panel hardware and sort of the infrastructure. The other one is Generac, which has traditionally been a provider of generators to the residential and commercial markets. And the other is Hannon Armstrong, that is a specialised lender to green infrastructure projects. So happy to talk on any of those three, whatever piques your interest.
I think start with SolarEdge. I've seen that pop up in your portfolio and a few others at different times, I think too. So they're involved in, is it the converter, all these sort of areas, or more dispersed than that?
Is that like Correct. Canadian Solar? There's another group called Canada Solar or Canadian Solar?
There is. So SolarEdge were an Israeli company, started back in 2006 by 5 Israeli friends who were passionate engineers who wanted to improve how efficient solar panel arrays are. Generally, solar panel arrays aren't as efficient as they could be, or they never used to be, because they were always operating at the lowest common denominator. So the solar panel that was generating the lowest electricity, all the others had to sort of line up to that base level. And what SolarEdge did is they developed a whole range of inverters and optimizers that can balance the load between these solar panels and vastly improve the efficiency of solar panel production. The optimizers balance the load, and the inverters basically convert the direct current that's produced by the solar panels, and then can push it back into the grid, or you can use it to charge your battery, your Tesla, power your house. So we started researching SolarEdge sort of towards the back end of 2019. It had run up a lot. We thought it was reasonably fairly valued at that point. And then obviously COVID hit, and the stock went all the way down to $75, and we thought we were getting an absolute bargain. We were going to get one of the leaders in solar panel infrastructure at incredibly attractive multiples. So we entered a position, and obviously it's performed very well since then. So that's one of the names that we think has really got a great future.
Is it like the picks and shovels would you consider it that, for lack of it? Everyone likes that saying that you don't buy the solar panel, you buy the people that make the solar panel actually usable.
Correct.
Yeah.
So they are, so they, as we mentioned earlier, the cost of solar panels is coming down, but they've really been able to provide great hardware, great infrastructure to this industry. And we think, you mentioned earlier, Drew, that the growth historically of solar panel rollout has been huge. We estimate in the US that's going to continue at between 15 and 20% a year. I don't know if you've read, but California introduced legislation at the beginning of last year, the 1st of January last year, that any new house built in California has to be equipped with solar panels. They're the first US state to do it, but I think there's probably a few more US states that will come out and do that. So there's the sort of government assistance helping these names. But one of the things we like about SolarEdge, and it's similar to a couple of other businesses we'll talk about, is that they sort of started out as this niche business providing inverters and optimizers, but they actually want to be a smart energy company. So they're looking at ways to expand. So they're building smart grid technology. They're making acquisitions. So in 2018, they bought a Korean battery manufacturer, so they can also offer batteries now as part of their solution. And more recently, they bought an Italian power e-mobility company, which basically provides powertrains for electric vehicles. So when I talk about powertrains, I'm talking about sort of the electronic motors, the motor drive, the gearbox, the batteries, the battery management system, the software. And so that immediately took them into a new segment of smart energy. And they recently announced a deal with Fiat in Europe to provide the powertrains for their electric Ducato van, which is one of the more popular commercial light vehicles in Europe. They've been around for a long time. I remember seeing them when I was growing up in the UK. But that is that's a really exciting development, and we think that's going to continue very strongly. Obviously, Fiat are a very big company, so that partnership is very, very promising for the future. But they might also start doing deals with some of the other big auto EMs. So yeah, we think there's a really great future for SolarEdge, and we think they will continue to look for avenues of growth and opportunities within the entire ecosystem.
And the next one, so Generac, is that diesel generators? Jamie loves a diesel generator from memory.
No, well, some of them
not diesel.
Gas. They're not on diesel. But really interesting what SolarEdge for us, and it's an example of great management teams do great things. So yeah, you're in a stock because it's the niche leader in inverters. But great management teams will go out there and do other things with capital, and that's why we probably mentioned it 4 times now. But at the start of it, when you asked us, but look, the most important thing for us is niche leadership and the great management teams, whether they're growing because of EV and renewables, or they're growing because they're in some sort of identity, which cybersecurity, or just any of the massive boom areas there are, or outdoor leisure, etc. It's got to be the management team to execute. And I think the Generac story is pretty similar.
It's actually really interesting thing that Drew and I talk about all the time is management, and how to, I mean, we could go on for hours here, is how do you tell the management team is truly good? You know, a lot of fund managers we meet always say, oh, we're great at assessing management. And, you know, sometimes there's really poor management in really good companies. And, you know, that drives the reputation of everyone that's associated with that C-suite. And then there's really good management, and they just happen to work with or for companies that are just totally in the wrong sector and have a really poor product. And, you know, they do a great job, really good management, but they're just not right in the right sector, in the right environment. So I find this concept, or we find this concept of great management and how do you assess that, is a really interesting, and it gets lots of lip service, but it's one of the harder things I assume you guys do, because you get involved with management and like them, and then suddenly they disappoint, and, you know, they go, well, are you telling us the truth? Are you not telling us the truth? Or, you know, it's really powerful weapon, but one that
it's a key thing. I mean, it's what you pay us for, really, as active fund managers and stock pickers, is to be able to go and do that. I mean, the short answer is that just like good people at anything, whatever their role is in life, social or work or whatever, or faith or family, whatever, they're good at everything, and they're conscientious to everyone's needs, and they allocate energy or whatever well. And they've got a good idea of the future. So, I mean, and they're good at everything would be our viewpoint. Guns are good at everything. They are sensitive, they're smart, they can be aggressive and execute on opportunities. They can look after their own. They can, you know, admit when they're wrong and change. Like all the things that you want to look for in a human, you want to look for in a management team, is what we'd say. And therefore, the way we go about it is just trying to check all the different areas. So what have they said and done before? You know someone as well as you know how they're going to react in any situation. So that's an easy one. They might not have been around that long, but you can see what they've done in their personal lives. And obviously the ESG work's an incredible amount of not just audit, but thinking and trying to ask the right questions. But basically, in general, it's saying that the people who tick the boxes in the most places the best, they're probably the best management team. Well, you can't have a management team that's just focused on profitability and not focused on, let's say, corporate sustainability, because what that actually means is that they don't give a much about the future, and they'll take risks.
Sure.
Is it much better getting access to management and making those assessments in a smaller, more nimble, so you get some ideas about the acquisitions they're making, compared to Shell, you know, trying to make investments into renewables?
I mean, yes and no. I mean, on acquisitions, good companies the acquisition should be very sort of foretold in terms of their strategy and how it fits into their business. So when it comes, the name might be a new one to you, but how much they paid and what it does and what it's going to do for them should be well flagged. In terms of access, COVID's one benefit of COVID, if we can talk like that, apart from increased investment in a greener future, is that the number of Zoom calls. So, Si, how many calls have we done now since basically last March?
I think we're doing 3 or 4 a week with management teams, which has been really great for us, because we've moved from sort of having to travel to Japan or Europe or the US to jumping on a quick Zoom call for 45 minutes. I was on a Zoom call with one of our companies last night in Japan. So that access has really ramped up, and it's not just IR that are taking those calls. It's often CEOs and CFOs. So that's been a real benefit. And it's not just the companies that we own we're talking to, all the companies we're interested in. It's often their clients and their suppliers, which really gives us a great insight into the specific companies that we're looking at. So that's been very beneficial for us.
Yeah, so management's super important. I think on Generac, was a very similar story to SolarEdge. It was a company that was a niche leader doing all the right things, and then they just went and really started ticking even more boxes and doing even more incredible things. And their generators have always been very high. They're very reliable, because they're the backup generators for hospitals and ICU units and stuff, so they don't miss a beat. And I think the main point, if we sort of go back, we talk about quality management and niche leadership, that's all one. But then in terms of the imagination and sort of trying to work out what's going to happen in the future and the stock picking, we knew, everyone knows the US grids in a terrible state of disrepair and very underfunded for 50, 60 years. Not just the wildfire blackouts in California, but then unfortunately for all the poor people in 14 states in the midst of a polar wind down to Texas, all the rolling blackouts there. And our view is sort of the US response to anything. I mean, this energy may have a little bit more government top down, but the top down's likely, as Simon said, more you've got to put more panels on your house. And we think the US response to most things culturally is very sort of local and private. Whether it's healthcare or anything else, that's your problem, mate. The safety of your property, that's your problem, mate. Your power generation, that's your problem, mate. And that's always how the US is. We sort of feel on things. So given these generators anywhere from sort of 5 to 15 grand, depending on how much and what you want, basically anyone who's thinking about getting a second car in the States is thinking about getting a Generac generator. But that's the explosion that we saw from the grid. And we saw a company that could capitalize on it. So that was sort of the base of the investment thesis. I mean, we can go through the numbers and the management team and the ESG in more detail, but that's the basis. And then they went and bought an Italian business that made generators and distributed them to the emerging markets. So that gave them global distribution, which was fantastic, and some Italian manufacturing. And then they went and invested in wall batteries, and they also made an investment in smart grid technology, both the software and the hardware, which is really exciting. And I think that smart grid's still the name we're trying to get our head around. We've been researching it a lot for the last year and a half, and we think we got a pretty good idea of what it all means, as Simon sort of outlined at the start. But Generac invested there, and that's another huge growth area for them. So just good people do good things, and great management teams.
It's like challenging your own business model. So you're going from generators that have been the core forever, and you're pivoting into where the growth, even if it's going to break up your business, the growth's there, the R&D's there, and there's an opportunity there that you've got experience in.
Yeah, or like good management teams should set out a vision for the future that all their clients, employees, stakeholders, everyone comes along for. That's what you want from a good management team, and to execute on it. And I think, as you said, generators said, we can't stay here just telling everyone that you need a generator behind your hospital and behind your house. The future's changing. So where's the future, and how do we be best positioned as a one-stop shop for the future? And they've gone out and done that. And yeah, it's disruptive in, like you say, Drew, in sort of the near to medium term, given that sort of over 80% of their sales are generators. But I don't think it's going to cannibalize it, because they're sort of putting together a future that is a smart grid where you've got a backup generator. You've got power generation from solar or maybe a heat pump or wind, depending on how big your smart grid is, your localized area.
You still need it. Yeah.
So a smart grid would be like a suburb or a small town, essentially, without industry in it. So it's basically would be resi.
No, industries are a big part of it, actually. We can get onto hydrogen for industry, actually, which is a huge area. Everyone's talking about mobility, but hydrogen for energy is a huge area. But any localized area, this is what it means to us. Any localized grid that is connected and not connected at different times to the main grid for reasons of basically power generation, power demand and generation requirements. So anything from 3 guys who have built their families' little houses on the edge of the national park and are very sustainable, their little solar setup with their batteries, and maybe a small wind turbine, everything from that to, as you say, like a vast community, maybe a mining site.
We've got a housing development not far from our place, the old paper mills, where it's, I think, combined batteries, solar panels on all the industrial part, and kind of sharing energy. It's almost its own power station.
Yeah, these ideas aren't new. Like, I mean, in the early 20th century, they had district heating in Europe. And this is just basically a communal version of power from that. But unfortunately, it's the reliability of the grid that's causing the issues for these poor people. How would you like it if you were, your power was cut off for 3 days regularly? I mean, you'd go out and buy a Generac generator tomorrow.
You kind of have it in snow villages too, don't you? They generate their heat and distribute through the whole village. Yeah. So it's centralized. Yeah, it's fascinating.
And so what you're going to need is inverters, as Simon's detailed. You're going to need So what you're effectively doing is moving power around, storing it and delivering it. And to do that, you need lots of copper and you need lots of semiconductors.
And getting it away from the coal stations at the end of the line.
And
lots
I think
of data too, I assume.
Just on the hydrogen for power, look, we don't invest in it, but it's not all about mobility, right? It's about governments are very focused on trying to deliver on climate change goals. And so power consumption at factories is a huge one, right? Because you want to run your factory during the day at peak time. And at the moment, even with our renewable mix, we've got no answer for peak apart from gas-fired power, right? But if you can build a green way of storing that energy overnight so that every time you turn your factory on at 6 a.m., it's just delivering on green energy that's been stored up underneath next to the plant, rather than every time you turn it on at the day, it's competing with all the AC units in the city, all the cars going around that are charging, everything. And so that's an exciting area where there's some serious projects in China and in Europe producing and storing huge amounts of power using hydrogen. So that's another exciting area.
And all these things need money. Is that a good segue to your third portfolio investment? Is it Hannon Armstrong?
They do, yes, absolutely. So Hannon Armstrong is a company that we've had in the portfolio for a couple of years. We bought it in March 19. But what they do basically is they are a niche lender to only green infrastructure products. So they don't lend to anyone else. They're structured as a real estate investment trust. So they're actually a pretty boring structure. But what they're doing is really interesting. So the name originally just got filtered out by our screen, and I started looking at it, and I was chatting to Toby, and we realised this was the only company in the US solely focused on financing green infrastructure. They've been around for a long time. They're over 35 years old. They know how to structure these deals, and they've got two big segments. The first is what we call grid connected. So that's the bigger lending to wind farms, to big solar panel projects. And they've also got then what they call behind the meter, which is much more when we talk about sort of the decentralized area of renewables. So sort of energy efficiency, distributed solar, whether that's sort of smaller solar farms powering individual businesses or a library, or helping power a hospital or something, and storage as well. So that really piqued our interest. And then we had a look at the growth and sort of the demand for lending in this space, and we forecast it to be significant, and it's actually turned out to be a lot greater than we even thought it would be. They've grown their loan book, so the quantity of loans they've written over the last year is up 38%. They've got a portfolio of about $3 billion worth of current projects, and they've got a pipeline of another $3 billion that they expect to write over the next 12 months. So and they're generating a yield of about 7.5% on this portfolio. So because they've got all these relationships with the energy companies, the project developers, we think they're just going to be the first port of call when people need financing for these projects. They're immediately going to go to Hannon Armstrong. So again,
so it's more like construct finance or development finance, is it?
Correct.
Rather
it is.
than,
yeah, absolutely. So essentially, they're just a dedicated lender to green projects.
Like a green bank.
Exactly, but they're very good at it because that's what they've specialized in. They know how to price these deals. They know how to evaluate the risk on those deals, which means that also they can allocate this capital to the most efficient uses and avoid those projects that they actually don't think are going to be particularly good or particularly sustainable.
They're not taking commodity risk.
Correct. Absolutely. Yeah.
So they're a lit, are they? They're like a listed investment trust?
So So they're a real estate investment trust, which
Okay.
is the US the US.
And how
structure.
do they expand their balance sheet? Do they keep doing more capital raises, or how's that work out?
So they're just borrowing in the wholesale markets. They do issue green bonds as well, which they then use for this this financing. So we chat to them every so often, and that's the first question I ask. I ask them, how is your access to capital? And similarly to a lot of other US companies we chat to at the moment, access to capital is very, very easy at the moment.
Yeah, sure.
Will they be similar to like Octopus, that's from over your way in the UK? Have you heard of Octopus Investments, private company?
No, I haven't. I'll have to have a look at those, Drew.
Yeah, Origin just took a stake, didn't they? 30%?
Okay.
So they're like the biggest renewable energy retailer, but they also have a significant private equity and I think loan investments. So they had a few trusts here buying individual solar farms. Probably more at the ownership and management, not just the financing, I think.
I've been away from the UK too long.
Okay, I think that's nearly time up, but a fascinating session, big theme. I'm sure we'll be talking about it next year and a year after. I appreciate your time and your effort, Simon and Toby. Always great chatting to you. Thanks, Drew.
Thanks, Jamie. Thanks, Drew. Really appreciate your time.
Thanks a lot.
Cheers.
Thanks, guys.
See you soon.